I think the big picture for earnings is that we have had an incredible start of the year where earnings upside surprises so far have enabled equities to offset the negative impact from rate repricing. So the bar for earnings to continue supporting market sentiment and to continue surprising to the upside has risen. You look at EPS growth expectation for US equity markets, 11% this year, which is higher than the historical average of 7%. So the bar has certainly risen, and that is the lens through which we need to review incoming earning reports. So what has happened so far? You talked about the banks, some of the big tech as well, and this week is very, very busy. I think the fact that so far there has been greater focus on guidance rather than top line misses or beats has indicated to us this is still a very forward-looking market rather than just looking back at what has been delivered. But it's also notable that misses have been more punished than in previous season, again showing that the bar has risen. So earnings is critical in understanding if there is further momentum to go in this equity market.
Wait, there's nothing hugely disappointing actually in what Meta did, but there was a disappointment for investors because they had such high hopes. Does that mean you're recalibrating, I guess, your exposure to some of the Magnificent Seven or AI in general, or is it just about being patient?
Well, if you talk about Magnificent Seven more broadly, there is another name in Magnificent Seven that reported misses in terms of the headline, but actually guided up their expectations, and that was rewarded handsomely earlier in the week, right? So ultimately, we're talking about an environment where when it comes to evaluating the potential for AI, there is greater focus if you look at how markets have been reacting on the guidance rather than on the top line misses or beats. This is what we notice in this particular season, which shows to us that this is still a very forward-looking market. And I think there is greater kind of runway for AI adoption to not only kind of play out further in this Magnificent Seven, but beyond the tech sector, in other sectors like healthcare, financials, and industrials as well, which are the sectors that we like. In terms of valuation, people look at how well these names have done, and intuitively they're like, okay, this is too expensive to get in at these levels. But because actually earnings have on aggregate over the last 12, 18 months or so really come through. In terms of valuations, like Magnificent Seven, 90% of their total return the last 12 months can be attributed to earnings coming through. Valuations have not become more expensive versus 1 year ago, and that's the big picture. I think sometimes that goes unnoticed in the context of the meteoric price appreciation. For all these reasons, we still like the tech theme. We think that there is more to play out.